Hi, and welcome to the Market Alert for Friday, the 8th of October 2021. So, Senate advances 480 billion debt ceiling deal after 11 Republicans joined Democrats to invoke cloture, whatever that is. Not heard of that before. Whatever it is, they've raised the debt ceiling, so they've been able to kick the can down the road now until December. So, it'll be interesting to see how the market reacts today after the non-farm payrolls with that as well. Debt ceiling kink shifts to December as bonds now brace for, there you go, December the 15th is the drop dead date. Take it from me, they won't shut down the government. We've had this before, we've seen this many times over the last few years, but they always end up raising the debt ceiling in the end. Even if the government is shut down for a month, it always ends up getting resolved. The central bank own America, they own the stock market, they own the markets, they won't let the government go pear-shaped. Simple as that. It's just rhetoric and grandstanding that you're seeing. The can has been kicked to mid-December, where the odds of a successful outcome are no greater than they were in the October debt ceiling. Disagree with that for the reasons I've just stated. Of course it will. S&P surges above key gamma level. Dow Jones reclaims the 50-day moving average after Schumer says we have a deal. All is well again. Well, we don't have the deal until the 15th of December, but they have a deal to kick the can, as we say. Oil surges after Energy Department says no plan to tap oil reserves. So no, of course not. And I'll tell you for why. Very simple. The whole of the inflation, hyperinflation thing is now engineered by the central banks. It's designed to create hyperinflation. They've tried every other tool in the book to try and inflate their way out of the debt that they've created over the last 50 years, and it's not working. So the idea now is to try and inflate their way out of it by reducing the value of all currencies to actually make the debt pile look less severe than it is. So much for the threat that Biden admin would sell oil from the Strategic Petroleum Reserve. But again, like I say, it's engineered, and this is part of it as well. Global food prices hit a fresh decade high. We know this is another BS thing because food prices have been rising for years. I mean, even just on a local level. Lamb steaks that were £6 only 18 months ago are now £9. This has been going on for years. Food inflation has been running around 10 to 20% for years. There's nothing new in this. It's just now it's been hijacked by the media there. And finally, India's central bank accumulating large quantities of gold almost under the radar. They've been doing it for years, along with Russia and China. And all central banks from 2010 as well have been doing this. Anyway, moving on to the news. Today is the big one, a really big one. It's the non-farm payrolls out at 1:30 p.m. So expect the market to be fairly quiet until this is announced at 1:30. Now, last month we had a bit of a disaster. They forecast, it's just down here, 720. They had 235, and this was positive for the metals, which we're going to come to shortly. This time we're expecting 490, positive number, and based on the ADP numbers that were released on Wednesday, this would back this up as well. So that's the main news for today. So let's see where we are after yesterday. We'll kick off with the Dow and the daily. You can see we drove up to the 89% retracement from this high to this low. Market stopped there, and it's waiting overnight now for the Fed. So making its way back quite nicely. What a surprise. And this is the bar that did it yesterday. 2 bars for an hour after the market opened, moving to the upside, then trading sideways before we got the retracement, and then the Schumer news, and the market sideways, holding at the DP level there at the moment. In the DAX, we have a similar picture in the daily as well, but not a greater move back to the upside as we saw in the Dow. The 89% retracement is from here to here, marked back, and the market stopped there, no surprise, and looking a bit weakish overnight as well. Again, depends what the figures are. If the figures come out as greater than forecast, then expect the market to ramp to the upside. And you can see yesterday the DAX was really quiet, stuck in a sideways range until the Dow opened, and that helped to move it back to the upside. Just say, waiting for the non-farm payroll figures. the market will anticipate this and trade it the day before as well. So like I say, expect things to be fairly quietish, waiting for the numbers. Meanwhile, the metals markets moving lower overnight as they have done. There seems to be a bit of a pattern shift here. But watch these today, because if that number comes out greater than forecast, this is what happened last time. This is August the 6th. Let me just go back to this and show you. We go back to the date, and you'll see that the forecast was for 870. It came out at 943, and this was used to slam the price of silver, as you can see there. And then if you recall, on the Sunday night, billions of ounces of gold were sold into the overnight market on the Sunday, sending the market lower. It bounced and then moved lower. This was the last time the figures came out for the non-farm payroll figures, and this obviously, because it missed the target, they sent the market up, and they were greater than, they were sent down. So like I say, watch this area today if it comes out positive. The market's already anticipating this and starting to sell off, as you can see already in the metals there, already moving lower from this high. So we'll see. I don't mind being wrong if they want to move the market up, but the dollar, of course, last time this shot right through the resistance way back in August the 6th as well. I think it was here, isn't it, for the 6th of August? Yeah. So you can see what effect it has on the dollar there. But if you go back to the September contract at the time, that was breaking through a high there. And then the last one that we had was September, wasn't it? The 4th of September, somewhere around there. Yeah. 3rd. But that the market held at 89%, interestingly enough, when we had the last release of the non-farm payrolls. Yeah, the 3rd. So let me just go back. Yeah, and there's the 3rd of September. So it managed to hold that, even though and silver reversed to the upside. But like I say, if it comes out positive, that's the pattern that we've seen before in these markets. So yeah, we'll take a view as and when that is released later today. Right, quick look at yesterday's activity. Okay, so in the pre-market futures market, we see this moving higher at the kickoff at 7, and then we had a quick trade to the upside. Didn't last long. We've got this resistance to the left, also a retracement for the market coming back, and then prices reverse and then trade sideways, and that's how it stayed for the day. Well, so not for the day, for the morning session. Between 8 and 10, the market did absolutely nothing, which really quiet. But then it's say the day before non-payroll figures, which is not unusual. We then went through the unemployment claims. There was more added to the dole queue, as it were, and I think it was 37. No, it wasn't 37 million. That's too much. 3.7 million. And they were thrilled about the fact that only 3.7 million people had applied for unemployment benefits. So then we see the market open, moves higher with the Dow. We have a buy signal. This is filled. The market's moving to the upside. And here I'm looking at the daily chart to see where the market's trading in relation to where it has been. The 89% retracement there is 241. Let me just bring that back. And the market continues to move to the upside. There's some selling pressure here, profit taking coming into the market. And as prices continue higher and then move back, I decided to take the profits off the table. It was only 16 points by the time I got out of the trade. Stuck at the high, market retraces, but then you'll see them buy back here. Soon buy back in this bar, and then we start closing back above the 5-bar moving average. And we head up to the 241 all the way through, the market staying above the 5-bar moving average. And you'll see up here we've got 236, 235, somewhere in that 233 there, and that's at the 89% area, and you can see how the market actually stopped there. And there you go, we're just hitting the, there it is now, just hit the 89% retracement from the daily. So very important once you've got through this sort of area that you can actually re-enter and then take advantage as the market moves up to those target prices that everybody is aware of in the daily chart, and then you'll see prices then just drifting sideways thereafter. once that was achieved. Okay, that will do it for this one. Let's see what the non-farm payroll figures are at 1:30. It's going to be an interesting day. I expect the market to be fairly quietish as it waits for these numbers and the lead up to it at 1:30. As ever, thanks for watching. Have a great weekend. See you in the next one.